Hi everyone, my name's Theresa Knower. I am president of Equity 1031 Exchange, and I thought it'd be fun to share some of our frequently asked questions that we get from prospective clients and relationships looking into a 1031 exchange. What happens if I miss the 45-day and 180-day deadlines? I'm going to be honest, it's not a good thing. Those deadlines are firm deadlines. There are no extensions. There's no leniency for missing either of those deadlines. So you really need to pay attention to them. If you miss them, your exchange is blown, to put it bluntly. Now, the only time there's an extension that's given for a 1031 exchange is in the case of a natural disaster, such as a hurricane or perhaps a winter storm. But those extensions are going to be granted by the IRS. They're going to issue a formal notice and they're going to outline who is entitled to this extension and what the criteria are. But in general, if you miss those deadlines, it means a blown exchange. The next question is one that we get quite often, and that is, how long do you have to hold the property after a 1031 exchange? The answer to that question is, it depends. If your goal is to sell it and do another 1031 exchange, most tax advisors would suggest a holding period of at least a year or more. If your goal is to actually move into the property, which, spoiler alert, is actually an opportunity for you, you're going to want to rent that property out for at least 2 years before even thinking about moving into the property. So it really comes down to what your plans are. If you want to sell it and do another exchange, at least a year. If you want to eventually make that property your personal residence, you're going to want to hold it and rent it out for at least 2 years. That brings us to our next question of, can I live in my 1031 exchange property? As I just mentioned, you could eventually move into that exchange property after renting it out for at least 2 years. There's no way around that. You've got to treat the property as an investment and rent it out for at least 2 years before even thinking about moving into it. Now, a follow-up question that I'll get from people is, so are the taxes triggered when I actually move into the property? No. If you hold on to that property and you live in it and never get rid of it, you do not trigger any taxes. If you leave that property to your heirs, they will inherit that property at a stepped-up basis, and all of that deferred gain is eliminated. This brings us to our next question, which is, can you defer taxes forever? Yes, you can. You can continue to do exchange after exchange and defer those taxes forever. As I mentioned earlier, once your heirs inherit that property, they're going to inherit it at a stepped-up basis, and all of those deferred gains are going to be eliminated. The last question is, how is a taxpayer supposed to report the 1031 exchange? Usually they'll say, are you going to send anything to the IRS? No. What we'll do as your qualified intermediary is provide you with a final packet once the exchange is completed. You're going to use that information to then complete Form 8824. This is an IRS form specifically for reporting your 1031 exchange, and you'll submit that with your tax return. If you need assistance completing that form, then your tax advisor or your CPA will be able to help you out with that. To learn more or to speak with one of our 1031 exchange experts, please visit getequity1031.com.